Welcome to Academic Gain Tutorials. In this video, we will look into the differences between primary market and secondary market. Securities market can be defined as the market whereby financial instruments, obligations, and claims are available for sale. It is classified into two interdependent segments, primary market and secondary market. While primary market offers avenues for selling new securities to the investors, the secondary market is the market dealing in securities that are already issued by the company. So, let's look into the basic differences between primary market and secondary market in a tabular form. Difference number 1. The marketplace for new shares is called primary market, whereas the place where formerly issued securities are traded is known as secondary market. Number 2. Primary market is also known as new issue market, whereas secondary market is alternatively known as aftermarket. Number 3. Direct purchasing takes place in a primary market, whereas indirect purchasing takes place in a secondary market. Number 4. Primary market supplies funds to budding enterprises and also to existing companies for expansion and diversification, whereas secondary market does not provide funding to companies. Number 5. In the primary market, security can be sold only once, whereas it can be done an infinite number of times in case of a secondary market. Number 6. Buying and selling between company and investors takes place in a primary market, whereas buying and selling between investors takes place in a secondary market. Number 7. The company will gain the amount on the sale of shares in a primary market, whereas company investors will gain the amount on the sale of shares in a secondary market. Number 8. Underwriters work as the intermediary in primary market, whereas brokers work as the intermediary in secondary market. Number 9. Price remains fixed in primary market, whereas in secondary market, price depends on the demand and supply force, so the price fluctuates. And difference number 10. The primary market is rooted in a particular place and has no geographical presence, as it has no organizational setup. Conversely, the secondary market is present physically, as stock exchange, which is situated in a particular geographical area. The two financial markets play a major role in the mobilization of money in the country's economy. Primary market encourages direct interaction between the company and the investor, while the secondary market is opposite, where brokers help out the investors to buy and sell the stocks among other investors. In the primary market, bulk purchasing of securities is not done, while secondary market promotes bulk buying.